What is the chart of accounts and how many accounts should you have? So what did I just say? Well, let's get into it. We're going to talk about the chart of accounts today. Super fun. So what's up, everybody? My name is Chris Hervochon, abetterwaycpa.com. You're probably wondering why I'm sitting here in a pink polo today. And the reason being is because I was out volunteering at the RBC Heritage golf tournament this morning, and that's where I came from, and this is the uniform. So here I am, pink shirt and all. A lot of people say it's ugly, but I don't know. I kind of like it. So what are you going to do? Anyway, if you have any questions, by all means, ask them as I'm going through this. If you're watching on a recording, please do reach out, put your questions in the comments. Happy to go back and answer those. Always happy to engage and clear up any of the questions that you may have. So let's get into it. What is the chart of accounts? So per Investopedia, and Investopedia is a great website if you've never seen it or heard of it. It's a good place for financial information, good place to find definitions to financial terminology, things like that. But here is their definition. So a chart of accounts, COA, that's the abbreviation, is a listing of each account a company owns along with the account type and account balance shown in the order the accounts appear in the company's financial statements. Chart of accounts is the official accounting term for the display of this information, which includes both balance sheet accounts and income statement accounts. Now, balance sheet accounts is your assets, liabilities, and owner equity accounts. And then your income statement accounts, that's your revenue and expenses. So pretty simple, pretty straightforward. All those things, if you've seen prior videos that I've done, all those things, they interplay together, right? So that's how you create your financial statements. Basically, the financial statements are made up of accounts, and the chart of accounts is just the listing of those accounts. So simple enough, right? So how many should your business have? So if you're doing the bookkeeping for your own business, if you're trying to figure out how to classify things, if you're trying to figure out what or how much detail is enough, how much detail is too much detail, well, the answer here is not simple. It's not straightforward. The answer is, well, it depends. So you should have enough accounts so as to organize your financial statements in a meaningful way that will allow for strategic decision making. And that's what accounting allows you to do, right? Is to take your numbers, the numbers in your business, the financial information, and to make strategic decisions. So that's part of it. So you've got financial data, non-financial data. You hear me talk about this all the time. When you blend the two together, that's leveraged data. But those two different types, financial and non-financial, that's the type of data that you need in your business in order to make strategic decisions. So continuing on. However, you shouldn't have so many accounts so as to have minimal activity in many accounts or that you're splitting hairs when classifying transactions. So the latter piece of that sentence is when things get confusing, right? When you're going to classify, the Starbucks transaction that you had with a client. Well, is that client meals or is that just meals? Or should this expense be miscellaneous or miscellaneous other? You're splitting hairs, right? You want to have accounts that have enough activity so as to justify their existence. So if you have an account that has one transaction per year or every other year, unless it's a special circumstance, you probably don't even need that account, right? Now, on the other hand, if you're lumping everything together, so you've got tons and tons of transactions sitting in miscellaneous, that's the best example, right? You want to break out that miscellaneous account into meaningful categories. So maybe one category is meals, one category is travel, one category is office expense. You want it to be meaningful so that when you go and look at your financial statements, you know where to cut the fat, so to speak, or you know where you need to pull levers in order to make your business run more efficiently and be more effective. So not a straightforward answer, unfortunately, but you want to try to find that sweet spot in your business, and this is going to change over time. It's going to change with your business. You want to find that sweet spot where you have just enough detail where you can be effective, but not so much detail as to when you're going to classify transactions, if you're constantly having to ask yourself, well, is it this one or is it this one? At that point, you might think that you have too many accounts. So what does the chart of accounts look like? So we're going to go over to QuickBooks. I'm going to pull up QuickBooks, and I'm going to show you exactly where to find it. We're back to Larry's Landscaping. We love Larry. He's our buddy. And this is the demo company that I use for, all my videos. This is just demo data, so we can look at this and play around with it and, not hurt anything. So where do you find the chart of accounts? Well, if you see up here to the top right, there's this gear icon, and I'm kind of mousing over it right now. Select the gear icon, and it's right here on the left column, chart of accounts. So we'll go ahead and we'll pull that up. and you'll see here it says you're using 122 accounts. Now, why does that matter? Well, I'm going to show you in a couple minutes, but something to be aware of. So you'll see here the name of the account, so accumulated depreciation, barter, checking, yada, yada, yada. So these are your bank type accounts, so cash, okay, these first 4 or first 7. Type, bank account, so bank is cash. Detail, it could be checking, it could be savings, it could be cash on hand, things like that. And it's going to be this way for the various account types. You'll see down here you've got other current assets, it's a balance sheet account. Fixed assets, also a balance sheet account. On the asset side, credit card account, that is a liability type account that goes on the balance sheet, but on the liability side, and so on and so forth. And you get down here to the equity accounts, income accounts, and then your expense accounts are going to be at the bottom. So it kind of follows this flow, this logical flow. The accounts in QBO are listed balance sheet first. So assets first, liability second, equity third, just as I just showed you. And then finally, when we get all the way down here, see this is an equity account that I just highlighted. That's your last balance sheet account. And then here's your first income statement account. So billable expense income for Larry. Now, once we get past income, then we get into expenses. And so it's organized in a logical way. If you're looking at your P&L, you're going to see income on top. You're going to see expenses down below that. And then eventually it's going to fall to the bottom line. The chart of accounts listing in QBO is organized much the same way. Okay. So how many will QBO let you have? Well, why is this important up here at the top? Where I'm going to highlight it, where it says you're using 122 accounts. Well, QuickBooks Online just made some changes to their subscription levels. And I've got an Inc. magazine online article here, which I'm going to put the link to in the show notes. And it's also going to be in the slides. The slides are going to be out on SlideShare and Google Slides as always. So you can go and track those down. The link to those slides will be in the show notes to this video. So easy enough to go find those. But this article will be linked there. And so, QuickBooks going forward is going to allow you to have in the basic accounts, so that's your Essentials, your Plus, your Simple Start, they're going to allow you to have 250 chart of accounts listings, and then 40 locations and classes for your company. Now, if you go beyond that, you're going to have to bump yourself up to Advanced. And the Advanced plan is about $100 a month. So it's significantly more expensive than Plus, which I believe is $60. So if we go here to the pricing page, they're running a special now. So Simple Start's $10 a month, Essentials is $17, Plus is $30, and then Advanced is $60. Advanced is, you'll see here, normally $150. So their pricing is not consistent, but no big surprise there. They run specials on occasion. And this is only for 3 months. You'll see here where they're saying that the discounts are, but something to be mindful of, right? So if you're going to get into the 250 account range, that's not necessarily a ton of accounts. If you've got a decent sized business, you can get there pretty quick. It doesn't take much, especially when you're considering that that's over 2 different financial statements, right? So that's including your income statement and your balance sheet. You can get there pretty quick. You'd be surprised. It's not huge businesses that bump up against that. And basically what they're trying to do is they're trying to force you into that higher subscription rate. Big surprise there, right? Because they want you to pay more for your subscription. So fair enough, capitalism and whatnot. But it's something to be mindful of. So one of the points that I just made a couple minutes ago is that you want to have not too many accounts so that things become confusing. Well, this maybe is an incentive for you to kind of pare down your chart of accounts and to be really efficient and really mindful. If you're going to bump yourself up to that advanced subscription level, you want to make sure that you really need to do it to justify that cost, my opinion. So that's that. And we also talked about the pricing. So how does the chart of accounts affect the financials? So I'm going to walk through that real quick. So I'm going to go ahead and pull up the reports in QBO for Larry's Landscaping. I'm going to go ahead and pull up the profit and loss. So this is your P&L, and I'll go back to last year just so we have some good data to look at. Run the report, and I only want to see the totals so we can get rid of the month. Okay, so here's a nice consolidated P&L. And again, this is demo data. This isn't real data. It's messy. This is basically a sandbox. So if you see in in your gross profit here, so you've got your income less your cost of goods sold, that equates to your gross profit, okay? Now, let's go down and try to find a good example here. So here's a good example. So in automobile, we see fuel and we see maintenance and repairs, okay? And we've got the subcategory here of automobile. So this maintenance and repairs and this fuel, those are sub-accounts of automobile. And this is a really good example of how you end up with more than 250 accounts, right? Because this is actually 3 accounts. Automobile is an account, that's a parent account, fuel is a child account, and maintenance and repairs, it's also a child account. So it's 3 accounts that make up total automobile. So if you're going to have parent and child accounts, that's going to proliferate the size of your chart of accounts rather quickly. So if I'm going to go and change my chart of accounts, I'll go ahead and I'll pull this up in another window so we can just scroll back and forth. And what I'm going to do is I'm going to move this fuel expense. I'm going to move it down under, I don't know, we'll try to move it to insurance. And I will scroll down here. Actually, I'll just search. Fuel. See, it's an other miscellaneous service type expense. Category type is expense, and then fuel. So we'll go here and we'll go to edit. And see right here it says sub account of automobile. Well, what happens if we make it a sub account of insurance? Right there. Save and close. And I'm going to go ahead and refresh this report. And QuickBooks will be super slow just because this is a live show as usual. And see right down here, fuel is now a sub-account of insurance. Now this is a good example of how you can actually go into QuickBooks and you can change the classification of the different accounts. You can move them around. But it's also a lesson that you need to be really careful when you do that, because you want your chart of accounts and your resulting financial statements to be indicative of the actual operations of the business. Now, fuel in no way, shape, or form is an insurance type expense, right? We know that. It's not logical. It should be automobile. But that's a good example of where things can go wrong. In another case, and I see this quite a bit, software type expenses for certain businesses, maybe they should be above the line. So above the line means that they should be sitting here in this cost of goods sold category to get you to your gross profit. Now, why would that be? Well, anything that's above the line, so anything that's above this gross profit number right here, those are the things that are going to be variable. So variable revenue is always going to be variable, right? Because it goes up, it goes down, sideways, whatever. But when you're thinking about cost of goods sold, those are the things that are variable with every next dollar of revenue that you generate. So you've got fixed expenses, those go below the line. You got variable expenses, those go above the line. And so you want to make sure that your variable and your fixed are classified appropriately, because you want to know, if I generate this next dollar of revenue, what is my next, what am I going to take away from that? So what expense is going to get netted against that? And and it's different for every single business, but that's just an example of why you need to be careful with your chart of accounts to make sure that the accounts are flowing to the correct places on your financial statements, right? Because you want to make sure that you're working with the best data, and that data is indicative of how your business is actually operating, so that you can then take that and then turn that into a decision to move your business forward. So simple enough, right? But that's the chart of accounts. That's how you change the chart of accounts. And actually, real quick, I'll show you how you add one. But basically, this is just the chart of accounts page. You go right up here to new and simple. So here you've got your account type. We talked about that. Bank being cash. Your detail type, cash on hand, checking, savings, yada, yada, yada. The name, so this can be whatever you want it to be. And then the description. And then we talked about sub-accounts, how you make an account a sub-account. So we talked about what the chart of accounts is. We talked about how many you should have. We talked about how many you can have in QBO, how that's changing, how that affects pricing. We talked about how you can edit the chart of accounts to determine where it goes on your financial statements. We talked about how you can go ahead and add a new one. I think that pretty much covers the chart of accounts for today. I think we beat that horse to death. So, all right. So my final thoughts. So just be mindful when you're creating and deleting accounts. You want to be able to properly classify transactions for strategic decision making, like I just was saying a couple of minutes ago. And you also want to avoid confusion. You don't want to have so many accounts that it becomes difficult to ascertain where a transaction should go so that you're kind of splitting hairs, but not too few accounts so that the detail kind of gets buried, right? So a good example of that is when everything gets thrown in the miscellaneous, and there's detail in there that you really need to break out so where money is coming or going to, so to speak. So the second point, be mindful of QuickBooks Online's new subscription limitations. That's 250 accounts. Anything above that is going to bump you into that advanced subscription level, and that means more money out of your pocket. So be mindful of that, and again, that'll kind of help keep you in check as far as creating too many accounts in your business. And then finally, if you change the type of account, it's also going to change where it goes on your financial statements. And then your financial statements, like I said, they need to be indicative of how your business actually operates and the detail that's important, so that you can actually make good decisions on good data. You don't want to make decisions based on bad data. That's how problems happen. So let's not do that. So here are the research sources for today. Again, the slides are going to be on SlideShare and Google Slides. The YouTube Live, the link to this video is going to be embedded here. The link to my website, the Investopedia article that I referenced regarding chart of accounts. There's plenty to read there, so I recommend that you go check that out. There's a Quora post that I did. So what does a good use of managerial accounting information look like? Did that post a couple months back, but it's a good read, I think, which is why I wrote it. And it kind of talks about some of the things I talked about today, but in a little bit different detail. I think that's worth a read if you're interested in how you should kind of think about organizing your accounting information. And then finally, that Inc. article that I referenced, which talks about the limitations in QuickBooks Online now. So let's connect. Chris at BetterWayCPA.com, 843-608-0298. That's the phone number. You can find me on Facebook, LinkedIn, Twitter, Quora, Pinterest, and Instagram. And I post on Quora every single day. I just linked to an article that I was just telling you about. It's out on there. That's out there in these slides. But there's tons of posts out there. I think I'm up to around 120 posts. So go check those out. If you like this video, or if you like any of my content, please like it and share it. That helps me to grow the channel. It helps me to grow my business. And so I really appreciate that. And other than that, I will see you next time.